resonating well with the market, but I think we need to be consistently educating and holding my hands at times, especially like you say in the current market. You've got to be in front of them at all times and reinforcing that message and talking them through the history of the business.
Amazing. No, thank you so much, Scott, for the context, for the insight, for the everything. A pleasure to have you here. We're also looking forward to having XE on Roxon soon. Work in progress. So thank you for coming today, and I hope to see you next time around.
Yeah, great to see you guys. Speak
Thank
to you
you,
soon.
Scott. Bye-bye.
Thank you, Scott.
Bye.
Bye-bye. All right, guys. This was Scott, co-founder and CEO at XE, Bitcoin treasury company from the UK. Very happy to have Scott. And now we're going to go into our next guest, which also, for the first time, happy to welcome Gareth. Gareth, how are you? How's everything? Where are you calling from? Welcome.
Hey guys, how's it going? I'm calling in from the sunny Netherlands. It feels more like summer than spring, to be honest.
Amazing, amazing. Are you from? You have a kind of a British accent. Where are you from?
I'm from South Africa, but my parents are
there you
British,
go.
and I live in the Netherlands. I've been here since 2022, and yeah, before that in South Africa for a very, very long time. So yeah, a bit of a mixed accent. Most people say
Amazing.
Australia, so I'm less offended than I would usually have been.
Amazing. Well, pleasure to meet you and pleasure to have you here. Gareth, well, we're roughly like almost a little bit less, but almost 50% down from previous all-time highs. We've been stuck in this like 60, to be more fair, I think it's been like 64 to $75,000 range, mainly between 65 and 70, because the 60 part we only reached there once. So what's your view? What is happening in the market? For how long should we be around? Like I saw that you've been in this space for a long time. So like, what's your understanding of what's going on now in the market this year?
Yeah, sure. Look, I am not a trader or a day trader or anything like that. So I don't follow charts, and I never covered Bitcoin as a markets journalist. So I was more doing features and that kind of thing. But obviously, I've been watching the price for a really long time, and I joined the block this month, so I've been there for about a month. But in January, I was still at Cointelegraph, and we had a chain reaction show at the beginning of the year where me and my co-host Robert Baggs gave our sort of price predictions for the year. And I was very bearish in my price prediction, and I said that we could perhaps go as low as like $55,000 per Bitcoin in 2026. But I mean, obviously, none of us had a crystal ball, and I don't think anyone was anticipating the sort of global conflict happening in the Middle East with Iran and the closure of the Strait of Hormuz and everything that's been going on there. So I think with all things considered, where we're trading at the moment is actually a pretty good sign of Bitcoin's strength and resiliency, and more from a macro perspective than anything else. Like I tend to remind people when they ask me about Bitcoin, like, why does it matter? It's decentralized, and it's censor proof, and it's seizure proof. So for anyone who's looking for a store of value and a money that they can have full control of, there is nothing like Bitcoin. So I think in these sort of uncertain times, Bitcoin holding up like it is a very good indication of its actual value proposition, which is this decentralized network where people have true ownership of this medium of exchange and the store of value that we use. So yeah, when I look at the price now, I think that it's doing pretty well, hovering between the $65,000 and $70,000 range. And yeah, just given how much uncertainty there is in the Middle East, I'm actually surprised we aren't trading lower than we are, to be honest.
Sorry, I was muted. And now this is great insight, Gareth. And what can you tell us about the global macro and the conflict and so on? Because, like as we always say, to understand Bitcoin, you need to understand the world. The world is a bit choppy and frothy right now. What's your reading? You're a super polyglot person. I mean, like you just mentioned, British parents, born in South Africa, living in the Netherlands. So, like, you may have a very like global, holistic view. What is your understanding of everything that is going on right now? And let's talk a little bit about the conflict. Like, what do you envision for the like foreseeable future?
Look, I've been trying to consume as much information as possible about the ongoing conflict, and I think the very simple fact that Donald Trump is able to use social media like he is a crazy thing to consider, because a president is moving the markets every day with the tweets that he's putting out there. I found it very interesting to see that a lot of cryptocurrency influencers and stuff kind of transitioned away from trading meme coins and other tokens to trading oil in the past like 6 weeks. And some people have made a lot of money, obviously. And you don't have to be an expert in geopolitics or global markets to understand that if the biggest producer of oil by region is under threat, and the passage through which oil, which is one of the main global commodities, is under threat, that's going to do something to the entire global economy, because oil is not just it's not just this thing we trade. The price of oil quite literally sets the price of most things that people take for granted. From the petrol that you're putting in your car, the diesel that you're putting in your car, to the groceries that you're buying every day, because oil is the commodity that basically powers all of these industries. Like, for anything to move from A to B needs to go through that. So I think that we're still very early into understanding what the consequences of what this in terms of global markets. And I'm not an expert in oil markets or anything like that, but I would foresee the price of oil going up massively around the world. How does that relate to Bitcoin? I haven't thought too much about it, other than the point at which people start realizing that they can use an alternative currency to hold value and transfer value without having to rely on the dollar or other fiat currency systems. We haven't seen like the dollar massively weaken or anything like that, but fiscal policy in the US is looking shaky, and I think pretty much everyone is in agreement that there's going to be some sort of monetary stimulus going on in the US, and typically in the last 10 years or so, that's always been a sort of upside driver for Bitcoin. But the question is, when is that going to happen, and when do you actually see that starting to trickle into the markets, and especially the price of Bitcoin? So yeah, like from a global perspective, I see people in South Africa. I have some family members that are living there. They're going to start feeling the pinch soon. The price of petrol, the price of groceries is going to go up. I think everyone's going to start feeling that. And how does that tie into Bitcoin? At the end of the day, we are all big believers in Bitcoin, as like self-sovereign money. And if we go through a period of drastic inflation across different countries, whether it's in the dollar, the euro, the pound, people are going to start looking at things like gold again, and hopefully Bitcoin as a store of value and a money that they can use in the future. I do think the biggest problem here is that most people still don't understand the value proposition of Bitcoin. And the people that understand it best are in countries that have already gone through hyperinflation or serious conflicts, and they've been in situations where the money that they had in their bank account is worthless and they cannot use it because it is controlled by someone else. Most people that would try and front run that and buy gold and other things, that works well. But if you need to leave the country and flee, and all your money's in gold, it's very difficult to travel with that value that you've accrued. And all these things drive me back to Bitcoin. So yeah, I think in the context of everything that's happening from a global perspective, it's definitely, for me, it feels like it should be a catalyst for people to come to Bitcoin once again. But but you can, you can lead a horse to water, but you can't make it drink.
No, 100%. And Gareth, boots on the ground. What's the commentary on the Netherlands about everything that's happening? Let's remember something. This weekend, jet fighter from the US was shot, was down. The US had to do like a rescue operation on the ground in Iran. Apparently, more. Like helicopters and so on were damaged or down. Like still we're still yet to see like exactly what's the aftermath of this whole thing, but like things are getting like are heating up. It doesn't look like they are cooling down, let's say. So boots on the ground in the Netherlands, like what's the opinion over there of everything that's going on, and like what's the outlook?
Look, I often see memes online of like people in Europe, like, like Europe maxing, like there's a global conflict going on, and then people are just like sitting enjoying their late afternoon sun beer, and that's how they're worrying about things. So I go and work quite often in co-working spaces and like coffee shops and stuff, and I don't feel like people are panicking or as worried as perhaps I am. But it is getting more and more concerning. I mean, obviously, I'm not a Dutch national, and I don't feel like people are feeling the pressure that they might be conscripted or something like that. But like the general feeling I've been getting is there's not a lot of worry. And I can say this: I went to Cannes last week to attend ECC, which is a very big Ethereum conference, and I don't do much of that reporting anymore, but I was there, and I actually didn't have a lot of conversations with people about the conflict. So it is a bit surprising that people aren't talking about it as much as they should be. But like you said, I saw the news about I think it was the F-16 that got shot down. The 2 fighter pilots were obviously behind enemy lines, and they both got rescued by the US military, which is just unreal to think that they actually got them out of there. But it does feel like it's escalating. Like when I saw the video that I think it was it was all over X, so you saw the video go out. But like when that happens, it does feel like things are escalating, and it makes me nervous. What I will say is I've spoken to a lot of people that live in Dubai, like former colleagues of mine, and it's a very weird conversation to have, because I feel like a lot of people actually want to tell you how they're feeling, but over the current messaging apps and stuff that they can't share images with you. They probably can't send too many sort of dissenting or concerning messages, because they know that they're being surveilled. And the authorities in the UAE have kind of said, like, please don't share these messages. Please don't share images. You're going to give intelligence to the opposition. But at the same time, it's giving a false sense of security. And I feel like it's dumbing down the situation. And if you speak to these people candidly, like, there's been many nights where you're just hearing explosions all the time, and whether or not they fear for their immediate safety, that's just not normal. And I think that that's kind of a sign of the times, that no one really wants to admit that they're worried. But I'll be the first to tell you that I think that we are in very concerning times.
Amazing. And from here onwards, regarding Bitcoin and crypto, how are you seeing everything related? Like the other day I was talking with an investor, and he was like, how are you guys surfing the bear market? And I was like, well, there's part of Bitcoin that is in a mini bull market, and that part of Bitcoin is called what is now digital credit. So what are you seeing in this world of digital credit? What are you seeing in Sailor's strategy? What are you seeing in Stretch? What are you seeing in SATA? Can you please tell us a bit about all of this like new industry and vertical within Bitcoin?
Yeah, sure. I've done plenty of reporting, on Bitcoin treasury companies since last year, and I really went in depth at Bitcoin Las Vegas. I spoke to Jack Mallers, spoke to Dylan Leclerc at Made a Planet, more recently Andrew Webley at the Smarter Web Company, and Crucis, who I think you're gonna have on the show a little bit later today. So yeah, I've been very dialed into that. I know the team here at Treasury, which is of course the Netherlands' like first big treasury, Bitcoin treasury company. I love the narrative. I did have the same sort of feeling that Danny Knowles kind of pushed towards Saylor when he did his podcast with him, where he kind of asked him, like, Do you think that there are just too many treasury companies that are kind of borrowing from your playbook and not really having a going concern company? And I did think that, Saylor went really hard at him, and maybe that was, I don't want to say uncalled for, but I think that he misunderstood what Danny Knowles was trying to say. But at the end of the day, I think that it's fantastic to see so many companies show that Bitcoin is not just for like the sovereign individual. It's not just for a person that wants to take money into their own hands. It's a tool for anyone. It's a tool for governments. It's a tool for companies. And this idea of digital credit that Michael Saylor is building in real time is just crazy. And I think, Stretch is probably the most impressive out of all of them, where you're promising capital markets, like basically a guaranteed 10% return on your money, and you're just accruing more and more Bitcoin. The question is, how many more products will he build on? And my question to him, and I'm hoping to chat to him in the next few months, is at what point do you have enough Bitcoin? Because it's a lot, and I will never go as far as to say that it's a centralization risk, but it is very interesting. He's got more than 750,000 Bitcoin. BlackRock's IBIT Bitcoin ETF also has like 700,000 Bitcoin. So you've got two very big institutions commanding nearly $1.5 million in Bitcoin. That's a lot of money for two institutions to be holding. I mean, obviously BlackRock is holding that on behalf of investors, actually, buying shares in that company. But yeah, in terms of Bitcoin treasury companies, I love the movement. I do think that we are going to see more of a shaking out, and I won't lie, I was a little bit concerned and surprised when I saw Nakamoto actually sold some Bitcoin last week. And I stand to be corrected, but I think that might be the first time that any of these, the biggest Bitcoin treasury companies have actually had to sell some Bitcoin. I haven't had a chance to talk to David Bailey about it, but I would love to and hear the real reasoning behind that. But we're definitely seeing we're getting to the point now where the stress test is happening, right? Like the Sailors and the strategies of the world have been running it and doing it very well, but the companies that haven't done it well and perhaps went through pipes and that sort of thing are gonna get very, very stress tested in the next few months.
There's some people that say that Bitcoin treasury companies were like the ICOs of 2025. What do you think about that comment?
I think it's fair to say some of them are. There was definitely a bit of a rush to doing it. And that's why I say I think it really comes down to the company and what they're actually doing. I don't think anyone can do it how Michael Saylor is doing it. And I think from what he started versus what it is now are two very completely different things. And he figured that out as he went. And now he's getting to this point now where he is, sort of running a digital credit. But yeah, you look at a lot of the other companies out there, and there's definitely some companies that's why I said I agreed with Danny Knowles, because I do think that there were some companies that saw what Michael Saylor was doing, and they just had the impression that you could go and buy like a dormant listed company and then just start issuing shares and buying Bitcoin, or taking on, doing convertible debt note offerings and then just buy a load of Bitcoin. So it does worry me. And yeah, I do think that there were sort of a few ICO vibes going on out there, but I'm not going to paint everyone with the same brush, because I think there's some fantastic companies out there, like African Bitcoin Corporation. I know their team quite well, and they're helping people get capital, small, medium business entrepreneurs in South Africa, get capital, launch businesses, and actually run them well. That's a going company. Smarter Web, we know what they do. I really like what Freddie New's doing in the UK as well with BTC HODL. Their business is running Bitcoin,
Metaplanet,
Lightning. Yeah, Metaplanet. There's a long list of companies that are fantastic, and then there's probably a long list of them that are not really doing anything other than issuing convertible note offerings. So, yeah, I think there is some ICO vibes going on.
And what do you think that separates, like in Spanish, in Argentina, we say separar la paja del trigo, which means like separate straw from, what's the saying in English?
Separate the wheat from the chaff.
Okay, separate the wheat from the chaff. So how do you do that?
Well, I think it's happening already. Like I said, Nakamoto selling some Bitcoin last week. That's separating the wheat from the chaff. I think that the companies that won't be able to sustain Bitcoin going to low prices for a very long period of time will either have to start selling their Bitcoin, and then at some stage, as far as I understand from all the conversations I've had with all the experts, because I don't, I'm not a financial advisor or a financial expert. I'm a journalist, but all the conversations I've had with these people is that eventually, if you get into distressed territory, your MNAV is going to trade way below 1. And then essentially, a company could come in and buy you because they're going to be buying Bitcoin at a discount, because the Bitcoin on your balance sheet, as it relates to the price of your shares, would just be at a huge discount. So I'm sure in the next 1 to 2 years, if we go, you asked me earlier about how long do I think the bear market lasts. I think definitely 2026 we're going to be sort of in a doldrums in this sort of price range for some time, and there's going to be some companies that aren't going to be able to sustain themselves, and they're going to get bought out by other investors or by other Bitcoin treasury companies. If I was Saylor and this is an opportunity to do that, like raise some cash and buy some of these companies, maybe we'll see it happen. But that is the sorting the wheat from the chaff. I think the markets will do it for us.
Yeah, I had a question, Gareth, coming back a little bit on the digital credit side, like talking about Stretch specifically, which you mentioned, Strategy is doing a great job out there. Like how do you see this Stretch evolving in the market, like equity against digital credit in the strategy company wise? What do you think about how this is performing now? How do you see the landscape?
Well, as far as I have seen and as I understand, like there's way more interest in Stretch than Michael Saylor's other preferred offerings. And I mean, I'll be honest with you, I bought some MicroStrategy shares a year ago and I'm down bad, So even I'm kind of looking at that being like, maybe I could be misunderstood. Like a lot.
But
do you bought how many shares I bought? Or
no. Like you bought at what price?
Oh man, geez, it was. I want to say it was quite close to the top. At least, like it was. They were at least $500 a share. Yeah.
Wow.
And we know where they are now. So, that's a prime example of like
you bought the top.
Yeah, I bought the top. I was drinking the Kool-Aid like everyone else. But really, like the reason I bought the MSTR shares was because I saw the narrative going on. And I was like, look, if Saylor is right and, MSTR is that sort of like amplified Bitcoin, and we have way more upside than that. Like, I want to experience what that looks like, like versus just holding spot Bitcoin in self-custody. So I bought some shares and I look at it now. I mean, I didn't invest more than I can lose. So I'm not sitting here worrying at all. But I look at that and I'm like, that's a bit painful. But on the converse of that, I think Stretch, when it comes to like the investment proposition, especially for people with a large amount of capital, there's not many other financial products that can give you 10% return on your money, right? And again, like I'm not a financial advisor, but even I've looked at different DeFi protocols. I recently sold some real estate in South Africa, and I want to put that money to work. Like, you could argue that Stretch is probably one of the best ways to do that if you're guaranteed these returns. But I will say that now, like once bitten, twice shy, I'm not quite sure I want to pile a whole load of money into Stretch. But I say that, and clearly lots and lots of institutional investors are more than happy with the product and the risks associated with, because people are piling millions of dollars into the product. I don't know if that answers the question, Luca.
No, yeah. What I think is interesting there, Gareth, because like we at Roxxon, we're working on digital credit as well. Being able to loan to take a loan with your Bitcoins and just buy some Stretch and do the carry. Like what I thought it's interesting there also is, given the risks as you were mentioning, like Stretch is rated, I think, at a B-. And if you look at products which are rated at a B minus, same market, same whatever, you know, they're just, their yield is more approximate as an 8 to 9, you know, which is basically Stretch. If we remember last year, they launched at a 9, I think it was, right? So they wanted to be better than what they were asked for, and now they're just insane, you know, like you see it trading at par, 11.5, like it looks really good, you know, and volume is picking up as well. So yeah, it's good to see, you know.
Yeah, I think for anyone that has significant capital to deploy, it just makes sense. And like I said a little while earlier, I love the idea of Bitcoin as the pillar of this being built, you know. And there'll be some critics out there that would be like, this is going to be the straw that breaks the camel's back, or like, this is the big risk to Bitcoin. But I like to speak to people a lot smarter than me, you know, the Pierre Richards of the world, and he's like, this is a fantastic product, and we all like to believe that Bitcoin is like pristine capital, right? Is this not the best example of using pristine capital and actually building financial products that are on top of sound money? That's supposed to be the whole point, not you know, a central bank just being able to essentially create money out of thin air, because you have to do the proof of work to create the Bitcoin and then put it on a balance sheet and then, you know, build digital credit on top of it. But I'm always skeptical. Like I'm not going to be the person that's going to sit here and be like, nothing bad could ever happen. I'm skeptical. I'm very skeptical. And obviously Bitcoin's, we're in a bear market. If anyone's saying to you that we're not, they're clearly blind. The question is, how low does Bitcoin go? And like, what are the risks to some of these businesses? I don't think, I mean, Saylor's said it, they've got like at least 2 years of runway to pay back dividends and that kind of thing. So they should be able to last. But I am just always skeptical because at the end of the day, this is also business. People are making money out of this. But I believe in Bitcoin. I believe in its value proposition, and this is clearly working. But I don't think it's going to work for everyone. I think there can only be one strategy and one company that's going to dominate this market. The question is, what's it going to be in 10 years? You know, is this going to be one of the major banks of the future? Is that what Saylor's building? I think it is. I don't think it's what he thought it would be at the beginning, but I think he realized in the last year or two that this is what it is. It's the best form of digital credit that you can get, and that's, he's building it in real time. Things are going to break, but it's working for now.
That's one thing I was going to raise, and here we are huge fans of digital credit, but one of the things that we're still missing is a stress test, right? Like for now, everything is going well. Like we were saying, like we're in a mini bull market for the space regarding this part. But then my next question is like, okay, what is going to happen when we see some real stress? And I think it's going to be good, but still, like we're yet to see that stress test part. What do you think about that part in particular, Gareth?
I guess it really just matters like how low Bitcoin goes and for how long it stays low for. I don't know what can make us really go a lot lower than this. Just considering, you know, like the geopolitical environment that we're in right now, and like a major global conflict kind of brewing. And to me, that's like the value proposition for Bitcoin. Like if that doesn't push people towards Bitcoin, I don't know what will. But I also think that the last 2 or 3 years has been so different from all the years that we experienced before. Just for some context, I got into Bitcoin in 2017 as a journalist. I started writing about Bitcoin midway through 2017 and earning Bitcoin to write. So I was earning sats as I was going, and this is in the build up to Bitcoin hitting $20,000 for the first time. So a huge amount of mania, a huge amount of retail money coming in, driving the price up to $20,000, and then obviously things crashing from there down to like, I think it was like $3,000 the next year. So to go through that as a newcomer, acquiring some Bitcoin and then seeing the price go up and down was quite painful. And then just to see how the market evolved over the next few years, and almost like less and less retail driving interest in Bitcoin and way more institutional money driving interest and the price of Bitcoin. That's kind of where we're at now. So the question is like, are there going to be enough people in the world that are going to come back to Bitcoin that it can also drive price up, because more and more people want sats, it's a finite amount of them, and it's going to, have the cause and effect. And also how much institutional money is still going to keep piling into Bitcoin. I think it's just been quietly happening on the side. And one of the interesting narratives that I've seen in like the last, I guess, year as well was like, if there's so many different institutions and sovereign funds, that kind of stuff, quietly amassing Bitcoin, like, why is the price suppressed? And we saw like all the stories come out about the big hedge fund that was basically like selling Bitcoin every day. And I'm not quite sure if that was actually true. And that's why Bitcoin was so suppressed for so long. But it does just make me wonder, like, what's truly suppressing the price right now, and how much impact will like a huge amount of retail money coming into the sector and this continued institutional money like driving the price. But yeah, like I don't know. I don't know what will really. Yeah, I guess just depressed price of Bitcoin for a really long time is a stress test. And then it just depends on how well all these companies that are running on a Bitcoin standard can sustain that. And we've already seen like, some of the big miners selling some Bitcoin in recent weeks as well. That's a stress test. If miners are selling Bitcoin, then, like they're, that's it. Like they have to sell Bitcoin to keep the lights on, to keep their miners running. They don't want to have to sell their Bitcoin. But if they have to, they have to, and that's a stress test in real time.
Gareth, this has been a pleasure. Looking forward to having you more. Unfortunately, we need to go to a very brief pause and then have our next guest. But what a pleasure to have you here. And now we're looking forward to seeing you again.
Thanks for having me, gentlemen. Great conversation.
Thanks, Gareth.
It's been a pleasure. Bye-bye. Alrighty, guys. This was Gareth Jenkinson, ex-Cointelegraph, now at Blockwork. At the block, sorry, and it's been a pleasure. He's been calling us from the Netherlands. Now we're gonna go to a very brief pause, and we're gonna come back with our usual roster. Alrighty, let me put the. Let's go.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Oh, no.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Alrighty, we are back. Really active day. We're now gonna welcome our usual guest, Alex. Very nice to see you as always. How's everything? How's life? How's Bitcoin?
All good here, doing great, and looking forward to the conversation with you guys. I've learned that we are going to speak about institutions just before, and so let's go. Nice to see you.
Alex, can you please tell us? Well, last week we were with Valen. Can you please tell us the latest on Capital B, and can you please tell us the latest as we've already gone through SATA's ex-dividend date, and as we are approaching Stretch's ex-dividend date, a little bit what's the outlook on the market?
Well, Capital B has announced last week that we raised again 2.8 million euros towards more Bitcoin accumulation, and as well that we have had our shares tokenized with our partner Stoker, and that comes from a market initiative, and that's providing access to the share for professional investors 24/7, tradable in Bitcoin. Investors can also contribute shares directly, and that's a path towards more tokenized access of the share. Importantly, it's also tokenized on Bitcoin itself through the sidechain of Liquid, and in the future we could expect that the share in a tokenized format could be accessible in exchange platforms as well. I hope at some point, of course, that we can have the share tokenized in Roxum, and probably in other places as well. But that access in 24/7 Bitcoin tradability of the share is quite important. You know, we've gone through the Easter weekend, and happy Easter to everyone. And the markets were closed for 2 days, and actually it's 4 days in a row with the weekend. So the share actually was available in Bitcoin directly, and that's great. In terms of the market, I think we are in really an exceptional opportunity zone right now. 3 years ago, Bitcoin price was $30,000. 6 years ago, it was $8,000, and that's 100 to 700% growth, 2 to 8x. If we were to do a projection for the future with those types of numbers, it could mean that Bitcoin could go towards 142K, 500K. And considering that Bitcoin treasury companies are today around 1x MNAV, or slightly above or slightly below, depending on the companies, if we see in the future MNAV levels going back towards 2 to 3x, that would mean, if you would extrapolate, of course, the Bitcoin price levels, that could mean that in Bitcoin treasury company stocks, you could see Bitcoin equivalent price levels of 300 to 400K to 1 million to 1.5 million. And if there is as well, in the meantime, duplication or triplication of the Bitcoin per share, well, Bitcoin treasury company shareholders that are positioning in this bear market could effectively see over the next 3 to 6 years the equivalence of $2 to $3 to $5 million of value in terms of Bitcoin comparison based on the stock price of those companies. And so we are seeing right now in the bear market the companies that keep executing, the companies that have been serious since the beginning about the strategy to hold Bitcoin forever and to have a very conservative balance sheet management and to have a very disciplined management of the company focused on increasing Bitcoin per share over time. And I think those will be the winners in the next bull market that is really preparing right now.
This is great, Alex. And Alex, please tell me something. Do you see that there is room to continue improving the rates in digital credit, or do you think that so far so good and we should continue on this track and growing from this point? Because this is something like when a strategy announced that they would keep the 11.5%. There were many comments that okay. There were other comments that were like, we were expecting a raise. What are you expecting for digital credit that right now you have sat at 12.75 and stretch on 11.5?
I think people are not prepared for what is coming. They are not prepared for a strategy with Bitcoin at 500K or $1 million. They are not prepared for Strive at those levels, for Metaplanet, for Capital B, for Smarter Web, for Orange BTC, and so on. They are not prepared for that because the levels of Bitcoin accumulation and the levels of pressure in the market in terms of demand from the industry will really have a significant impact on the Bitcoin price itself and on the market dynamics. And I would assume that those levels of yield that we observe today in digital credit will likely over time stabilize around those levels, and that there will be more digital credit products that will be issued. Digital credit is the North Star for Capital B. We've been the number one digital credit issuer last year in Europe in terms of non-listed digital credit, the Bitcoin convertible notes, and also the less fiat levered. So we are 40% amplified with the Bitcoin converts and almost 0% fiat leverage and 0% fiat leverage, in fact, on our Bitcoin treasury company strategy. So our objective is to become Europe's largest digital credit issuer in the listed markets as well. And of course, that's an objective for us. It's for the long term, and it includes a lot of, let's say, time to make sure that those products can be issued. And there is no certainty, of course, but that's our full objective. And there are not that much companies out there in the world focused on being the largest digital credit issuer in their country, in their region. Whilst this is the biggest idea, this is the most important one. And this is the one that allows a strategy, and today as well Strive, and in the future potentially Metaplanet and potentially Capital B in the future, to accumulate Bitcoin with no issuance of shares. And that's extremely powerful. And investors today get to buy that future potential of those companies that are essentially early stage strategy companies and that are focused on that model. And you would have thought that over the last 3 to 6 months, you would see more company joining that strategy. And what we see is companies that start to sell Bitcoin, while others continue to accumulate and build the right balance sheet to be prepared. So what I see, on the other hand, is digital credit being distributed at a scale that is not imaginable today. So you made available Stretch and SATA, I believe, on Roxum, and that's a major example of how you can access double-digit returns even on the fiat standard, but keeping your Bitcoin, and I think that's quite interesting. And you will see that in a much more amplified way in terms of number of actors that will propose that type of services in fiat lands. And I believe that you might become and continue to be the leader in that space in Bitcoin. And so that's very exciting. And I think that there will be a lot of connections in the future as well, in terms of the Bitcoin players and the fiat players and the large banks. One day there will be a BlackRock moment for digital credit. There will be a large US bank that will say that it proposes now 7 to 8% bank accounts yielding that number, because it's backed by Stretch and it's backed by digital credit. And you will see institutions that will completely change how they measure their performance. I saw recently a data point that's quite interesting. In traditional Bitcoin land, institutions hold 8% of the supply. And in MSTR, institutions represent more than 40%. And so for digital credit, you will see an explosion of the proportion of institutions that will participate in the future. It started with a lot of retail participation. 80% of the participation is retail. And over time, that will invert. And again, as in Bitcoin, retail investors that are the most savvy investors are front-running institutions in what will become the standard for fiat yield. And the most important aspect is that Bitcoin investors will be able to generate a form of Bitcoin yield out of a fiat yield, because with the collateralized potential of the product that, of course, is possible on the Bitcoin standard, you could have that opportunity. And I'm sure you would be able to talk about that opportunity at length, Borja and Luca. So
Of course.
I think that will open a lot of different business models and a lot of different companies. We already see a multiplication of tokenization initiatives, and it's just the beginning. And this is also going to eat completely the DeFi world, and it's going to distribute Bitcoin to the DeFi world in a way that we have not seen as well before. And Bitcoin is just emerging as the standard store of value for the digital era.
Any doubts, guys, of what was just stated? Luca, you were going to send a question.
No, no. I leave you to explain a little bit if you want.
No, I am, before talking about Roxon Carry, Alex, I want to ask you a question, because you were saying all of this, which I find really interesting and insightful. And I was thinking, and I had this in my mind. You were talking about what the world will look like when Bitcoin is $500,000 or $1 million. And today, the treasury companies have a strong stack, like you guys and many others. Most definitely, you guys will have a big treasury in terms of fiat and in terms of dollar, pounds, euros, whatever. But also, what I was thinking is Bitcoin is gonna be harder to it's gonna be harder to accumulate more Bitcoin, in the sense that if Bitcoin is $1 million, well, you will need $1 million just to add one more Bitcoin, right? So and this is what we have been talking throughout the last couple of weeks. We were, hey, today is the best time to raise as much money as possible, because basically you're getting a Bitcoin fire sale and of an asset or a currency, depending on how you look at it, that in a few years, many of us believe that will be above the $1 million range, right? So it's like buying something for 60,000 that you know that in a couple of years is going to be 1 million. So my question is how do you envision the transition of Bitcoin treasury companies and the whole space? Because it's not going to be the same to accumulate Bitcoin when you have a 60K Bitcoin, 100K Bitcoin, 200K Bitcoin, than when you have a $500,000 Bitcoin or $1 million Bitcoin. So like, how do you envision this scenario where Bitcoin has a very strong and high price in terms of dollars, and Bitcoin treasury companies' mission of accumulating more and more Bitcoin? How do you see this?
Well, I think we can take parallels. We always say that everything about the fiat standard happened after 1971. And then when you dig into it, you discover that in fact, the gold standard was already broken during the First World War with the British. And then when you dig further, you discover that every currency in the past has been broken with fiat-like processes, adding different types of metal in gold coins, in silver coins, and towards creating the euro, which has with the ECB the mandate of stable inflation, which is backed by nothing. And so, in fact, you discover that fiat currency has almost always existed in different shapes or forms. And that, yes, there has been times where it was closer to gold, but credit has always existed. And I think credit will always exist. And in the future, the irony is that when a wealthy person takes out a loan to buy Bitcoin, it creates more fiat currency into existence as well at the same time. So as the Bitcoin price goes up, more and even higher levels of fiat currency are created out of existence, because we are not going to sell. So they are going to need to print a lot of money, because 70% of Bitcoin already today has not moved for 1 year. And strategy is going from 700,000 to 1 million in very short order. And, at these prices, it will be, of course, it will require increasing levels of fiat currency to buy more Bitcoin. But who will be in the best position to create fiat currency out of existence at that time? Well, it will be the largest Bitcoin holders that will be able to use their Bitcoin as collateral to create even more fiat currency and accumulate more Bitcoin and have the fiat currency go to zero in real time. So, in fact, even if fiat currency disappears, in that scenario, basically it will not disappear. It will just be replaced by another government that will say, look, that currency was bad, this is the new currency. I just saw a post about Zimbabwe currency. Like it's forbidden to use crypto assets and Bitcoin and so on. Use the Zimbabwe, like, what do you mean? So I think in a world where a fiat currency collapses, and we've seen that in a way with the Argentinian peso multiple times, but you know better than me.
We've had many forms and shapes of peso.
Yeah, the peso is still there, but it's just the name. The currency is just completely almost disappeared, but it's still used as the form of unit of payment in the country, because the bad currency chases the good currency when it comes to everyday payments. And that's Gresham law. So there will always be a form of state-issued currency, and even when, if one day it's not USD and as we know them today, it will just be a devalued USD, and it will be like, oh, but this time it's with a new standard and so on. And so what matters in that environment is to be the large asset holder that has liquid assets, that is able to take out a new credit and loan, and to accumulate even more Bitcoin with those new fiat units. And even in a world theoretically where there would be no fiat currency at all, well, people would just, it would be just barter. You would exchange a stock against different stocks or different assets against Bitcoin. But it's more probable that we will just have versions of stable coins in different formats, different states that will issue them, or different companies even. So I'm bullish on the companies that will have the most Bitcoin, because they will be able to issue credit perpetually and to continue accumulating Bitcoin, while the others need to sell. And we don't want to sell, and we want to accumulate, and we want to build the largest Bitcoin accumulation machine over in Europe. And whatever the currency, like tomorrow they can, the euro can disappear. Who cares? Well, I'm not saying that. I think it's we would care. I mean, a lot of lives would be destroyed, because imagine the number of people that have savings in euros. Imagine that like 90+% of the population in Europe has euro-denominated savings. This is dramatic. It's like we don't wish for the failure of the system. We actually want to make it more stable through adding Bitcoin inside that system, and replace the standard store value within the core foundations of our region, of our country, because that will make the new currency even possible, because it will be backed by strong assets in the country, in the region, and at the end of the day, it will make also the investors stronger, and it will enable the investors to have a share into a strong company, and potentially the most capitalized at that time. So we really want fiat currencies to frankly do well or better than what they've done in the past. But you have to be objective and see that fiat currencies depreciate at 10% per year. That's like the S&P 500, and even 15%. And over 5 years, that's 70%. Bitcoin is 70% volatility, and fiat currency is 70% certainty of going to minus 70%. So you have on one side certainty of going to minus 70%, on the other you have a risk of temporarily going to minus 70%. But on the Bitcoin side, you have the potential for 10 to 20x upside over the next 10 years. And that's amazing. And it's just liberating to have access to that information, that you can just save the value of your work in a network that is literally a time machine into the value creation of its contributors. And it's just amazing to be able to build foundations on top of that and transform capital markets.
This is great, Alex. Thank you so much. And Alex, as we get into the final phase of today's session, and as we have roughly 700 people across all channels watching this, what are your final remarks of what's coming up? Yeah, anything in general?
I would say it's really time to make your own analysis of what is going to happen in the next 3 to 5 years, and to prepare accordingly. Because in my view, the reason for why we had what is called a form of suppressed bull market, and I would not even subscribe to that definition, because in fact, what I see is more of the beginning of a cycle of institutional adoption that changes the grounds for Bitcoin scaling into a multi-trillion dollar asset, and most importantly, the core store of value for the digital world. Because last year basically was the great securitization event of Bitcoin. Mm-hmm. And a lot of long-time Bitcoin maximalists didn't sell Bitcoin to go out of Bitcoin. They sold Bitcoin to buy the companies that are going to accumulate the double, the triple, 10x that number of Bitcoin, and get an exposure into those Bitcoin accumulation machines to be able to double, triple their potential Bitcoin appreciation over time and contribute to Bitcoin adoption. And I think that's really what's been happening, and it's not going to necessarily happen again in the same type of proportions in the next bull market. And most importantly, in the meantime, we have 30 plus ETFs in Bitcoin. We have the systemic banks entering Bitcoin. We have the governments and the largest families in the world entering Bitcoin. And in my view, that will create the foundations for escape velocity in Bitcoin treasury company world, because we are creating the foundations for Bitcoin accumulation structures that will enable automated, systematic, scaled Bitcoin accumulation over the next 3 to 5 years. We are already seeing that. We are seeing the future with strategy. And this will get multiplied into the next bull market. And this will now transform demand into the stock market and into the credit market, into Bitcoin accumulation that will be 10x the available offering in the market and will send Bitcoin to uncharted territory. So I'm bullish on the future. Let's go.
As always. Thank you so much, Alex.
Right.
As always, a pleasure. And now we're gonna go with our last guest. So everybody, thank you, Alex.
Thank you so much.
And see you next time. Thank you,
Peace
Luca.
out.
Thank you, Alex. All right, guys. That was Alex, co-founder and CEO at Capital B, largest treasury company in Europe. So for now, we're going to have our last guest, also a very dear friend of the house as Alex. We like him a lot. He's like a diva. So let's welcome the diva. I see him laughing in the backstage. There we go. How are you, Jesse? How are you?
Hopefully, no operas to be sung today. I don't know that I'm warmed up for that. Maybe another day.
Maybe another day. So pleasure to have you here as always, Jesse. So Jesse, what has happened in the last few weeks? Would love to hear your updates, and then a little bit like what are you seeing in the market today? We had like a Green Monday. It looks like we just reached 70,000 mark. Now bulls and bears are fighting. So now we'd just love to get your inside input on you guys for the last few weeks, and then any commentary on the market.
Yeah, I guess I'll probably start with the commentary on the market, because it has been very interesting over the weekend and last week, really. Because last week I noticed that that Google report on quantum came out, and suddenly that was the hot topic. I had a number of folks that look to me from my pre-Bitcoin life, who look to me as like the Bitcoin person, pinging me out of fear, right? Like, what is Bitcoin broken from quantum? And so that was making the rounds on that day and really all last week. And yet that day, that the following 24 hours after that came out, Bitcoin was up 2.5%. And I think that's extremely telling, because that's the kind of thing that happens when a bear trend is exhausted, right? Like when bad news doesn't drive the price down any further, you're out of fuel on the bear trend, and that tends to happen when a momentum shift is beginning, right? Like when a structural change is taking place in the market, where the downtrend is giving way to, you can't hold the ball down underwater any longer. And I think that's what we're starting to see, especially with price moving up over Easter weekend. I think that well, we'll see. But there's 2 data points in the last week of what you'd expect to see at the beginning of a trend change. And, for me, that's very encouraging, I guess. Yeah, and then on the smarter web front, we are currently trading, according to our analytics dashboard, we are at a 0.7 MNAV, which is interesting, notable. It is the end of the tax year in the UK. Is last week. So tomorrow is the first trading day of a new tax year in the UK. I think a lot of international investors aren't aware of those dynamics. It's worth pointing out that Smarter Web has traded at a significant discount to 1x MNAV twice in its history. The first time being at the end of December, which was, U.S. end of tax year tax loss harvesting activity. We got down to a 0.7 MNAV. And then in January, we were briefly at almost 1.2 MNAV. Right now, at the end of the UK tax year, with any tax loss harvesting activity going on, we are at a 0.7 MNAV. And tomorrow is the first trading day of the new tax year in the UK. So we'll see what happens over the next month or two or three in terms of, is tax loss harvesting in the UK done? With the cessation of that selling pressure, what happens to our share price? We will find out. And what happens to MNAV, we'll find out. But at the moment, we are trading at a 30% discount to Bitcoin. Meaning, we're trading a 30% discount to net asset value, meaning if you were to purchase a share today, you'd be effectively buying Bitcoin at a 30% discount to its current market price, which I think is quite cool.
Indeed, for everybody who's watching, essentially, and just to reinforce what Jesse is saying, is essentially, if SWC had $100 worth of Bitcoin, right now SWC's market cap is 70, which means that SWC has more Bitcoin worth of than what the company is actually valued at. Which means, and this is like something, the analysis that we do, which means that if you invest, if you do the Bitcoin denominated trade, essentially, if you buy 1 Bitcoin worth of SWC shares, you're actually getting 1.3 Bitcoin of underlying in the shares that you buy, which is like quite a big Bitcoin trade. Let's say if SWC, and I would say when SWC gets to par on the MNAV, that means that from a Bitcoin perspective, you did 30%, let's say, kind of carry on that trade, which is very, very interesting. Jesse, do you have any other hypotheses regarding this discount in the British market other than the tax harvesting? Are you like, what is the sentiment on the UK market as well regarding Bitcoin treasury companies, and so on?
Yeah, who knows what the reason for the discount is at the moment. I think that's probably it's certainly a driver that stands out as a more likely driver than anything else in my mind. There's also probably an element of Bitcoin treasury company investors from last year are finally cutting their losses, and saying, okay, Bitcoin treasury companies didn't work out for me. I'm going to go invest in AI stocks or whatever is current, right? I think that's, that happens in Bitcoin. People who bought in the bull market end up losing conviction when other shiny things take their attention away. And that is just a cycle that repeats every 4 years, it seems, in Bitcoin. And it's a test of conviction when you have to maintain that perspective, maintain focus on the thesis and understand that volatility is part of the package. And so I think there's that going on too, that plenty of people are losing excitement, losing hope, especially because there's other shiny things going on in the market right now. And a Bitcoin bear market is extremely good at making you feel like Bitcoin won't rip again, and that flows through to Bitcoin treasury companies as well. And of course, we know over the last decade and a half, that tends to be proven just as wrong, every time. From Bitcoin, the pendulum swinging back in the other direction, and people get caught off sides when once they've chased the other shiny thing.
And Jesse, how are you thinking there? The recovering, let's say, of the MNAV, like what are the strategies you're telling? Because as you were stating before, and I remember very much the December one, we talked afterwards, and it was like a short, say, MNAV depreciation, from the treasuries that you own. Like, how are you thinking this today in terms of the tools you have, the strategies you make, and whatnot?
Yeah, we when we're at a discount to 1x MNAV, the things you can do are you can take on debt, or you can do share buybacks, or both. And those are ways to increase your Bitcoin per share when you're trading at a discount. And we've done a discounted warrant buyback since last month. So we repurchased 3,000 warrants, basically shares, from the IPO at a significant discount. So the effective MNAV of that transaction was 0.6, and by buying those shares at a discount to MNAV, you're in the net effect of it is you're increasing Bitcoin per share for all other shareholders. So that was an accretive transaction that added about 0.75% of Bitcoin per share, just from that transaction. And for the quarter, so Q1 is now in the rearview mirror. Our quarterly Bitcoin yield was negative 0.18%. So basically flat, and that's including the costs of our uplisting to the LSE, which are considerable when you're basically going through a fresh IPO process and all the costs that come from that. And our acquisition of another operating company in the web design space in the UK, Squarebird, which basically 10x'd our gross profits, at the expense of about 1% of our balance sheet. So pretty attractive transaction. But those things have costs, and we were able to almost entirely offset those costs in terms of a Bitcoin per share perspective, via this warrant transaction, and opportunistically adding Bitcoin to our balance sheet when we were trading at an MNAV premium, and we were able to run our ATM facility to sell shares directly in the market. And from that, we added 31 Bitcoin over the course of Q1. And most of the time in Q1, we were trading at a discount to 1x MNAV, but there were a few moments where we were able to sell our equity at a premium and increase Bitcoin per share as a result. Yeah.
Jesse, I have a follow-up question to you over there. A little bit we talked with the other guests last week, not so much today. How are you seeing today Bitcoin's performance amidst this global conflict? This weekend was a very important in that regard. A U.S. jet was shot down. The U.S. did on the ground operation to rescue the pilots. and Bitcoin had a strong reaction to it, like late night Sunday and today Monday. So a little bit, what's your view on how Bitcoin is reacting to these geopolitical events?
Yeah, I see that rally on Sunday, and it feels to me like it's more driven by market makers playing on a illiquid weekend, knowing that it's Easter, and probably screwing over some leverage short positions through that pop. So I don't know how much it's fundamentally connected to Iran, but certainly triggered by that, or the setup was created by that, I would guess. But yeah, for me, the uncertainty right now with the conflict it's an opportunity for Bitcoin, because right now, between AI and Iran, global uncertainty, macro uncertainty is extremely high, and that's very bad for Bitcoin. But the reality of that is that when there's any sort of resolution in the Middle East, and decrease of uncertainty, that's very good for Bitcoin. That's always been the case, because Bitcoin is the asset that's easiest to sell. In fact, I've had a few calls in the last few weeks of people in my network who hold Bitcoin but aren't high conviction, and we're thinking about selling because they view it as a risk asset, and now is the time to be de-risking their portfolios because of uncertainty. And it's the easiest asset to sell. You can sell it on the weekend. You can shore up your cash position. It's not tied up in venture capital funds or private equity where you literally can't access it. You can always sell your Bitcoin, and you never should. But I think that means that during times of high uncertainty, from a macroeconomics, geopolitical perspective, Bitcoin suffers because people sell it, and it's easy to de-risk your portfolio that way. And the reverse is true. So, right now we're at a point of high uncertainty. Any kind of increased certainty with how Iran is going to play out, or a de-escalation there, is good for Bitcoin. The other part of it is that war is expensive and you have to pay for it. And the way you're going to pay for it is by printing more money in one form or another, right? So it's all going to add to M2. It's all going to add to U.S. sovereign debt levels, and that's good for Bitcoin too. So that's how I guess I take the zoomed out view with regard to the geopolitical stuff, and everything's good for Bitcoin ultimately.
And Jesse, what's your outlook on the conflict? Do you think that this is going to last much more? Not like a little bit. How are you seeing the evolution of and the unfolding of the whole thing?
Yeah, I really don't know. Obviously, the U.S. has a bad track record of getting pulled into forever wars in the Middle East, and so I have a feeling that people are, especially people who dislike Trump, jump to that conclusion of like, that's what's happening right now. But I also think that Trump's prior history is that he doesn't like to be in wars. He doesn't like to be in conflicts. And I also think that the Republicans will suffer considerably in the midterms that are coming up in the fall, if they haven't reached some sort of resolution, and had an opportunity to claim victory and do a victory lap with whatever outcome exists. They're going to claim victory no matter what, and they need time to do that. So I tend to think that the expectation that this is a forever war is overblown, and that the Republicans will try to get some political capital out of this by exiting and claiming victory, in advance of the midterms. So we'll see. But I'm not a geopolitical expert. But I do think that, you know, there's some signal in Trump's prior disposition towards war, and also his constant attention to polling numbers. So we'll see.
Amazing. No, thank you for the insight. All right. So Jesse, what's the next steps for SWC in the short and midterm? There's plenty of movement on the digital credit space. You just said it now. You guys are trading at a 30% discount, which for sure is very interesting for any investors interested in getting cheap Bitcoin. Basically, what are the next steps for you guys in the short midterm?
Yeah, well, you know, we're focused on building out the infrastructure that we think is necessary to soar in the next Bitcoin rally. You know, our view is that Bitcoin treasury companies are downstream of really this crop is downstream of strategy, and strategy is downstream of Bitcoin in terms of, you know, how they move and enthusiasm for the model. So, you know, what you can do we're in a bear market for Bitcoin. What you can do now is build the infrastructure that is available to you as a company in the next rally, right? You reap what you sow. There's not enough time to build during a bull market, so you build during the bear market, and then you reap what you sow during the next bull market. So that's the approach we're taking now. I agree with what Alex from Capital B was saying before I came on the show, that, you know, Saylor really has created the playbook and set the stage for digital credit globally. And I think it's the most exciting thing going on in the world of finance. I think that Saylor has created the new hurdle rate for fixed income, and that is going to eat market share and flow into Bitcoin, eat market share out of traditional fixed income capital, and flow that capital into Bitcoin by way of strategy and any other Bitcoin treasury company that sets up a similar sort of model. So that's how we're thinking about it, and what we're focused on. And we're very excited about our position in the UK as the UK's leading Bitcoin treasury company. In my opinion, it's the third best market in the world to run the amplified Bitcoin strategy. You know, I think the US is simply the biggest. I think Japan's, you know, circumstances with their, you know, local rates make that a very attractive place to do the model. And then I think the UK London is the world's #2 financial center, and a huge portion of the world's financial plumbing flows through the UK, and 10% of global bank deposits are in the UK because it's such a large international banking hub. That makes it a place where there's a lot of capital that would be interested in fixed income. And that's a very good thing for a Bitcoin treasury company that seeks to be the MicroStrategy for a capital market. And we are focused on being MicroStrategy for the UK.
This is great. And Jesse, as we head in the final part of our interview, because actually today we're going to have to cut off 5 minutes earlier. Any final outlook or comments for the 800 people watching this right now?
Wow. Yeah, you know, I think, I guess the thing that I would point folks to if they're interested in learning more about what SmarterWeb is doing is last week we put out a Q1 investor update, which you can find on our Twitter, or you can go directly to our website and find it there. But you know, it itemizes the progress that we've been making, and the stuff that we've been building out just in the last quarter. And you know, it's easy to not see all of these items, but when you see them put together in a one pager showing here's all the things that that happened, and here's all the progress we've made in terms of building infrastructure. I think it's a lot easier to see where we're going, and how we're getting there too, in terms of little steps we're taking to become MicroStrategy for the UK. So yeah, I guess that would be what I'd encourage people to go take a look at, especially on a day like today where we're trading at 0.7 MNAV.
Amazing. Jesse, thank you so much. As always, guys, sorry, today we have to cut a little bit earlier. So thank you, everybody. Thank you, Jesse. As always, it is so good to talk with you. And guys, today is a green day for Bitcoin. So it's a green day for everybody. It's a happy day for us. Maybe it's a sad day for those who we want to buy cheap Bitcoin, but still overall happy day. And thank you, everybody. See you next week. Bye, Jesse.
See you guys.
Thank you. All righty.